yesterday was kind of this turning point. With this flight to quality, we saw equity sell off. There was this chorus of Wall Street executives who were like, okay, not so fast. What did you think?
Yeah, it certainly felt like the stock market was getting a little, yippy. What is the...
That's what the president said earlier this year.
Yeah.
But he's about the bond market, he said it.
Yeah, I know.
Yeah,
I know.
As you know.
Now it's their turn at the stock market. And so I thought, we had a decent bid in the bond market, but it wasn't huge. In the times past, if you had a really good sell-off in the stock market from elevated levels, you'd get a big jump. And we didn't get a big jump.
Why didn't we?
I'm not sure that the bond market has a lot of room for longer-term yields to go down, absent a very big change in the economic outlook.
So there's a floor, you see.
Yeah.
Yields.
So.
Is a big change in the economic outlook if the Supreme Court says, sorry, IEPA tariffs?
Yeah.
Those are not legal.
Yeah, I don't think that has a big impact on the bond market.
It's $100 billion that could go back to companies and consumers.
Debt we have?
Yes, I do. Trillions.
In terms of the bond market,
And
$100
growing.
billion is a fairly small drop in the bucket. Then how fast does that actually get back to somebody's pocketbook for spending? But, in general, the economy seems to be chugging along.
Right.
Okay. It's not great for everybody, but in aggregate, it's good enough. Inflation is stuck at 3% and kind of edging higher. Where do we go from here? If you've got inflation at 3%, maybe moving up and a 4% 10-year yield, that's equilibrium right now. We need something to change. And
do you think it's going to change?
I think in 2026 we'll probably get enough slowing growth and some easing in inflation that we'll see yields come down. But I think the market was just way over its skis, expecting the Fed to cut over and over again. And it is very difficult to forecast all the time, but now between tariffs on, tariffs off, no data, policy shutdown, policy making shutdown, I think the market's just the bond market's kind of just going, whoa, we're pretty well priced. Let's just sit here and wait for things to happen.
Well, so then does that increase the chances, Kathy, you think, of the Fed having a policy misstep here?
It's certainly a possibility, but I think my impression that I get from Powell and from many of the other members is, look, we're back to this navigating on a cloudy night thing, right? We don't have information. The path ahead isn't clear. And we've taken a couple of steps. We're not restrictive anymore. So now we pause and we wait and see what happens. We go slow.
I'm a sailor, and I've navigated at night, and it can be kind of not so great.
Yeah.
You can hit a rock, or you could hit something because you just don't read something correctly.
Right.
Or things can be smooth sailing.
Yeah.
So is there a chance, though, that I think so many people are shocked that the economy is still growing and we're kind of doing all right, and the market continues, the equity market, to hit highs. Not necessarily what everybody was predicting a few months ago, but I just do wonder what's the thing we could be missing.
Well, right now financial conditions have been very supportive.
Yeah.
Right? And I think that's another reason the Fed can kind of wait. They're saying, well, there's no evidence that the level of interest rates is holding back the economy. People can borrow as much as they
want. Except for housing still a little bit.
Yeah, maybe, but I mean, even housing's starting to kind of recover because prices are adjusting. So, what is the thing that gets us? It's never the thing you're looking at in your face, right? It's the thing you don't know. I'm worried about the buildup of debt, behind the scenes in the shadow banking system.
Private credit?
Yeah, to some extent. We know that the quality isn't great there, and we know that some firms are struggling. So,
how would a crisis like that in private credit manifest?
I think the issue is who's lending to the private credit folks.
Don't the banks lend to the private credit folks?
Yeah.
So,
right.
What's their exposure?
Well, we don't know. Because private credit is private, it's hard to know the quality of the assets in any given day.
Your
right?
face is really telling. Are you concerned that the exposure by the banks is a lot more than we know?
I think the banks, No, I think the major banks are fine because against their will, they've been forced to hold a lot of capital since the Basel rules. And so I think the banks are okay. But it does get to be sort of a cascade, right? You know, one thing leads to another, and a lot of interwoven lending takes place, and there's hidden leverage. And that's where you worry about things starting to change. I don't have any particular...
I didn't mean to put you on the spot. I
don't have any particular, like, this guy's going to blow up, story to tell. These are the ways in the past we've run into trouble. Somebody gets over leveraged, asset prices get out of whack, people are overconfident, and then things change.
Right.
So it kind of brings us back to the Fed and how the Fed works in an environment such as this, in an environment where it's not getting much data. We did hear from Lisa Cook this week. She said she sees the risk of further labor market weakness as greater than the risk of inflation will pick up. Chicago Fed President Austin Goolsbee said he was more nervous about inflation. Who's right?
Yeah, we'll find out.
We'll find out when we reach our destination.
Yeah, I'm more in Goolsbee's camp right now. Although the labor market has clearly softened, some of that is supply side, right? So we got the ADP numbers today. It was a positive number. Who's to say that number isn't consistent with equilibrium in the labor market?
So are these numbers accurate now? Because
ADP is as accurate as we can get
right now.
Yeah,
but
at the moment.
But when we used to get government data, we used to get the ADP numbers on the day before or a couple days before.
Right.
Day before? I don't even remember.
It was
this
same
world
week,
that we
Wednesday,
don't.
right?
Yeah, we'd get them earlier.
Yeah.
And then we'd get the numbers from the government, and they would oftentimes not even be close to one another.
Yeah, and that's true. I think part of that is ADP is private sector only. They didn't include government workers, so there's that discrepancy. And their surveys are different, but it's all we've got to go on. So it looks like that they're picking back up a little bit, and that's good news. The ISM figures, the manufacturing figures were okay today, with prices paid continuing to climb.
But then you have these fast casual restaurants coming out and saying, hey, we're not seeing the young consumers come in and spend $15 on a lunch. Forgive me, slop bowl, but that's like what they're called now, because they're feeling squeezed.
Yeah, and that's
an indicator.
That's the issue of the economy is working well for some and not well for others. And we've seen problems in the car loan market, usually subprime borrowers running into trouble. I am concerned about the agricultural sector.
Right,
they've been really hard hit by tariffs, and it's not just farmers or agricultural businesses, it's their lenders. We have banks that lend in that sector as well. So these are pretty good-sized parts of the economy, but we've got then the CapEx spend, wealthier consumers continuing to spend, and that in aggregate is adding up to positive growth.
I keep talking about this quote, I don't know, rich European or somebody who just said, I don't want to be a rich person in a poor country. I don't want to be a billionaire in a poor country. When does the lower rung of the K, I think we were all shocked about the SNAP benefits and how many Americans are getting assistance when it comes to food in the world's richest country. So when does that, ignoring if you can even the social issues, but the economic costs too of that, and so when does that come home to roost? Or are we seeing that with government debt? I don't know.
Yeah, we've spent, we've run up a lot of government debt to try
on different things,
right? On many things,
right?
To sort of fill the gap, and that's been a positive. But it's always about the jobs, right? People are okay until they lose a job.
Yeah.
So that's why the unemployment rate is so crucial to watch. And, of course, we don't really have that. We have now the Chicago Fed putting out their estimate, which is helpful.
Right.
That last one was 4.4%, a little bit above the last one we got from the BLS. But 4.4% is not a high unemployment rate historically. We used to think full employment was around 5%.
Right.
So, it's going to... If there's going to be a problem, it's going to be because people lose their jobs. That's usually the way it happens.
It's as simple as that. Not so simple if you're losing your job.
Right.